are joining us for another instalment of our Deal Analyser Week 2020, celebrating the launch of the Lendlord Deal Analysing software. And I've really been looking forward to this instalment because, along with Lendlord's CEO and co-founder Avram Shahar over there in Tel Aviv, Israel, today we are joined by two gentlemen. They're both Lex Allan Group. We've got Lex Allan himself, who is the principal, and then we've got Harvey Pearson, who is the director of Hexagon Commercial Property, which is one of the component parts of the Lex Allan Group, and they're based in the West Midlands area. So guys, lovely to have you on the call because you have got both sides of the coin. You've got the residential side and the commercial side, and I think a good place to start would be, coming back from COVID-19, we've had a huge burst of activity, obviously pent up, probably not sustainable. What are your views on kind of risk in a post-COVID-19 market, both on the Resi and the commercial side? And do you think people need to be doing more deal analysis and research? If I could go to you first, Lex, for the Resi side.
Yeah, definitely, Vanessa. Really good to be here. From our perspective, we absolutely expected a frenzy of activity post-lockdown. We worked every day during lockdown. We had lots and lots of going on. We knew that we were going to have buyers of properties and vendors of properties anxious to secure deals. The analogy that we were putting forward was that there is a log jam effectively, which unfurled as soon as we were allowed to get back into things, and a torrent of water ran down a relatively dry riverbed. And that was great. And I think everybody expected that. What we didn't expect, Vanessa, is a second phase of activity. And one of the things that we've identified, certainly in our area, is that there have been, and we've analysed this, and we earnestly believe that people have sat in lockdown with their laptops, with their tablets, whatever it might be, and they thought, right, okay, well, this is an opportunity for us to review our accommodation status. So, we've got people who are saying, well, okay, let's have some more space. Let's have some less space. We've got people, we call them lawn lovers, who've looked at the four walls of an apartment and said, actually, we'd like some outside space. We've also said people, okay, well, this is an opportunity for us to realise our accommodational dreams. So we absolutely had not expected the sort of second phase of activity. We've been in business. You've referred to the group of companies that I've got, and we've got 4 facets to the companies. I'll just briefly tell you so you get a bit of my background. We've got 3 estate agency operations. We've got a residential lettings portfolio with over 1,000 units on management. We're the top of our estate agency tree in our 3 respective areas. We deal with block management and we deal with commercial property management. Harvey on my right hand side, he is my co-director in Hexagon, and we're number 1 in terms of commercial property agency, and he'll run through all that. But in terms of the agency side of things, post-COVID, we definitely had not expected this sort of second phase of activity. And in 28 years of trading, June was our busiest month ever. June just gone. So, it was extraordinary, really. And in terms of where we go from here, you're absolutely right, Vanessa. We do need to be really on our game in terms of analysing where we are going forward, because I think the next 3 or 4 months are going to be really, really important. And whilst we have got this initial frenzy of activity post-lockdown release, and then a second phase of activity which respects people's aspirational variations to their accommodation status, I think what's going to happen now is that the confidence that currently prevails is just going to get marginally impacted as we go month to month. And when we hit October and the last of the furlough benefits accrue employers, and they make the stark decision about, well, do we re-engage with all our staff, or do we let some of them go, and some inevitably will be let go, that is going to impact employee confidence. And as we all know, the housing market is underwritten by confidence. So at the moment, it's really, really difficult for me to say, right, Vanessa, I see a situation. And we had loads of people in furlough saying, well, actually, Lex, can you give me a call as soon as we come out of furlough and let me know where all the deals are? Well, to be honest with you, ladies and gentlemen, they ain't bleeding out there because, we've had this first phase release and then we've had a second phase. So at the moment, those people who said, well, of course, the market's going to dip 20% and I'm going to be at the front of the queue because I've got loads of cash and I'm able to rock and roll. I'm afraid, guys, you're not really you're not being given those opportunities, certainly in our area. And as I say, we're sort of west of the West Midlands, and things will vary from region to region. I've no doubt about it, but I have no indications whatsoever that there is a feeding frenzy for lions at the kill, because we're not there yet. In terms of forecasting where we go forward, things might change as we get towards October, but it's all going to be about confidence. Now, in terms of
what I was going to jump in there, Lex, with what I'm taking away from what you're saying, and it's interesting because we do have a thread about this on Property Tribes, in terms what you're really highlighting for the landlord community is changing tenant priorities, because we're hearing a lot of tenants wanting a home office, a garden, outside space, and I think landlords have to start rethinking what tenant priorities are, because obviously they're our clients. And Harvey, I think on the commercial side, we are seeing a big fallout. Obviously a lot of sectors being very badly hit by COVID. What's the vibe where you are?
We're throughout lockdown, we did three quite larger retail deals, about 5,000 square foot each shops, from an emerging convenience store operator, and they look at it as an opportunity. So we've got some companies that are saying, okay, Harvey, can we have some offices because we're downsizing? We've got some companies saying, Harvey, we need bigger offices because we're upsizing, or because we need more space between all our employees within the offices. And ultimately with the commercial property side of things, a lot of our clients which we're advising are investors, and they will always look at tenant behaviour. Now, if there's no tenants out there, then obviously we need to temper what we're advising our clients to pay. But at the moment, it's very similar to the estate agent side of things. It's fine. We're putting stuff under offer which has been stuck on the market, perhaps, like the big three shops which I mentioned. We've got offices, a 3,000 square foot office that we recently just let. Took a week to complete. We're hoping to complete on a 15,000 square foot warehouse, which client only went to view today. It's hoping to complete tomorrow. So there's definitely confidence still out there, and people still want to do stuff. And very similar to what Lex said, people are still saying, "Oh, when are we going to get these bargains?" And everyone's thinking, once the furlough goes, then there's going to be all these bargains. Perhaps there maybe more so in our sector if we've got owner occupiers that need to cash in. But there's been a lot of sale and leasebacks happen already, and I think that's happened from the companies that have maybe realised, okay, well, we're going to hit harder times. Let's cash in on it now so we can maintain the harder times throughout. So we're looking at something next week for a client that's £6.3 million, a big manufacturing operation, and it's a sale and a leaseback from a very big company, but they're cashing in on their investment so they can trade through the harder times that are undoubtedly there to come.
Fantastic. Well, Lex, I think I'm right in saying that you are a RICS surveyor. Is that correct?
Yeah, sure. Yeah, been a chartered surveyor for a long, long time. Can't tell you that. That's top secret. Yeah. Sure. Yeah.
Well, I'm sure that you're very kind of into numbers and analysing deals and making sure they stack up. So if we go to the Landlord Deal Analyzer tool, perhaps Aviram could bring it up for us on the screencast. I mean, obviously, you know your area like the back of your hand, and you would walk into a two-bedroom terrace in a certain street and you would know what it would rent for. But clearly you've got to put the correct data into any kind of digital tool to get the right outputs. And if we have a look at the Deal Analyzer, I mean, clearly, return on investment is one of, the biggest metrics that, landlords and property investors tend to look at. But do you think there are other, important ones that we do have on the analyzer, such as, cash on cash return and that kind of data as well?
Yeah, the critical thing, certainly from a residential perspective, when we deal with landlords who've got a significant number of properties, and they are looking at underlying yield. Obviously, it's very, very important. I think that they are reconciled to a yield expectation of circa 4 or 5%, and that is because long-term yields, in terms of alternative investments, are obviously incredibly low at the moment. I think that the COVID pandemic has made people even more circumspect about the stock market. I think that they also are taking a fairly bullish view on the medium to long term perspective of capital appreciation. And so, the critical things from my perspective is, yield is important. Capital growth is, they'd like to have a mindset on that. And we're frequently asked, well, look, Lex, what do you think this property is going to be worth in 5 years or 10 years' time? And it's a bit like a stockbroker. I don't know whether you've ever had this conversation, Vanessa, but you ring your stockbroker and you say, are there any stocks that you are nailed on for capital growth in the next 3 months? And the stockbroker says, well, if it was that easy, I wouldn't be talking to you because I'd have so much money, I wouldn't need to spend time talking to you. So, and the same thing applies to me. If I absolutely knew nailed on what every property was going to be worth in 5 years' time, with respect, Vanessa, I'd be on my yacht in the Bahamas now. So, so it's not a given, okay? And it's quite difficult to forecast that aspect in any format of analysing. But I think it becomes a gut feeling, and for those investors that listen to what we have to say, the most successful ones are the ones you've got on your tribe here, your property tribe, will be the ones who've got a really good gut. And it's the gut feel guys who are the ones who are going to succeed. Yes, you've got to have your underlying yield accommodated by your investment, and if you get that, and then you get your other facets of the equation right in terms of where it is, what what it's like, and whether the area is rising or falling, then you're onto a pretty good thing. There are some other things which are factors which are post-COVID, which I think are now more important than they were pre-COVID. And I think outdoor space, you've touched on this, Vanessa. I think that this is going to become more and more important in terms of the potential for capital growth. I think proximity to public services and public transport, I think, is also going to be significant in terms of potential capital growth. And I also think landlords now are moving away from period properties, which are far more maintenance intensive, because landlords want to be spending time on the next deal rather than servicing the last deal. But one of the reasons, the two reasons for that is that firstly, you don't want to be embroiled in spending loads of time on maintenance matters when you could be spending that time more productively actually in finding and searching and chasing down the next deal. The second reason for that is that the cost of refurbishing properties is running at a pace exponentially higher than cost of living. So builders are making lots and lots of money. Because they're in very high demand. So we used to buy properties which were always on their last legs, absolutely not a problem. I could get my team of contractors in there, we could build them up, we could do the refurbishment, and we would make capital growth on the refurbishment project. Now it's really, really difficult for me to do that.
Yeah, well, the margins are a lot slimmer. Yeah, I think you're right, Lex. The margins are a lot slimmer, and I think that, again, going back to the landlord software, you've, by putting in your data and being conservative, and I hear what you're saying about, kind of nobody's got a crystal ball about what's going to happen in the future in 5 years' time. But when we spoke to Phil Stewardson, he said that he does a kind of best case scenario on landlord, and then he does a worst case scenario, and then kind of hope that he comes out somewhere in the middle in reality. And I think that's a good way to look at it. But when you're inputting your data, you can actually see what your return on, what your cash on cash return is, etc. And I would go with what you said, Lex, about do act on the conservative side, because it is very uncertain. And Harvey, I was going to ask you, I'm just a very low risk, straightforward buy-to-let investor. I've done a few little refurbishments, but I've not done anything particularly adventurous. I'm very low risk. Some obviously a lot of property investors, they like to move from residential to commercial, and that's quite a big step. I think there's some fear associated with that. There would be if I was doing it. Do you think software like Landlord could perhaps help property investors make that transition, because they can see clearly the numbers that they're going to be looking at going forwards?
Yeah, certainly. I mean, there's obviously different costs associated with commercial, with different loans of values, etc., etc. But certainly, you know, if you're a complete novice looking at landlord from a commercial property perspective, then it just makes everything much easier for you, doesn't it? It's all there. You know, cash on cash, I think, is a brilliant tool there that you've got there. You know, your gross yield is obviously relevant as well. Forgive me, I'm not quite sure whether the stamp duty is reflective of commercial property to residential property or not, because obviously there's different rates.
That's a very good point. Perhaps we could bring Avaram in there, because Avaram at the moment, it's only based on residential stamp duty, isn't it?
Right. Yeah, we calculate it for residential stamp duty, but it's interesting because today I had a call with a user that suggested to add also commercial stamp duty calculation. So we will do that.
Yeah, I mean, and typically as well, maybe smaller investors might not be expecting to, but all the calculations that one would usually look at when you're looking at commercial property is you probably put in an amount for an acquisition fee by an agent like ourselves. So it might be nice to put something like that in.
Very important that you put that in. Don't forget that.
I don't, again, legal fees are generally tend to be a bit higher with commercial. There you go. So obviously they can get a quote from their surveyor before their conveyancing solicitor before they do it. And inspection costs is obviously very relevant as well, because you might expect to pay a lot more with a commercial property, getting a mortgage, getting a surveyor around there for mortgage purposes, than you would just value in a 2-bedroom terrace. So it's good that it's all interchangeable, and obviously there's certain tweaks you can do to make it more specific to commercial. Then it's only going to be better for the end user.
Vanessa, can I just step in here? Just a point that you made when you introduced this particular aspect. You said that you were a residential investor and you were looking to make that jump, or you were nervous about making that jump to get into the commercial property arena. Can I put your mind at rest that it is a really worthwhile jump to make? My personal portfolio was predominantly residential. I've switched predominantly to commercial. And the reason I've done that is twofold. Firstly, because I have greater longevity of tenure from my incumbents. Secondly, I have I've chosen my units such that I have bought units which historically were manufacture, and with a minor refurbishment costs, which is just basically painting walls, floors, and making sure it's appropriately insulated and providing a small office space. I can move it into the storage and distribution arena. Now, the justification for doing this, or the method in my my methodology in this, is that I pick units up which are capitalised based on £3 to £4 a foot, and I move them into storage and distribution arena, and I churn them out at £6 to £7 a foot. And obviously, you do your capitalisation, whether you're looking at yields of in between 7 and maybe 9%. You can work the sums out in terms of what that does to my capital value. Okay, so and my return on my investment return, which is where we have our gross yield, is probably starts off at a higher level than that which I would reasonably expect on residential, which, as we've discussed, is say 4 or 5%. So if I'm starting off with a gross potential yield of maybe 7 or 8%, and then I do what I do in terms of capital rental value uplift, which then is interpreted into my capital value uplift. For that reason, Vanessa, it's something that you and your viewers should have a really serious think about. Okay, obviously don't buy anything in my area because I want them all. But I'm only teaching. But do you know what I'm saying? It's just the morph and the leap from residential, which has been historically a safe zone. And it's been specifically a safe zone, not because of yields, but it's been a safe zone because the capital value appreciation across the southeast, and particularly in the cities of London, has had a bit of a knock on that, and we're all familiar with that. But certainly where we are in the regions, your capital value uplift has made that a much safer and a better place to be. When you're looking at the gross yield that you get. Gross yield, from my perspective, is yield that you get on rent plus capital value.
Well, that's an awesome tip, Lex. And post COVID-19, we have seen a massive velocity of change in the property sector. Some industries and sectors have been absolutely decimated, but one sector that is absolutely thriving is, of course, the distribution, couriers, because we're all getting stuff delivered at home now, and we've seen, you know, Amazon take on literally thousands of new staff and so on. So you might be on that yacht in the Bahamas sooner than you think, Lex.
Thank you, Vanessa. Lovely.
But,
I'll get a life jacket just in case.
But just as we kind of wind it up here, I'm sure you'll agree, Lex, that the private sector landlord has faced enormous challenges over the last 5 years due to Section 24, increasing legislation, more onerous regulation. COVID-19 has put another layer of challenges on private sector landlords, and I'm sure you're probably going to agree with me that now is, you know, landlords are going to have to adopt a business approach now. They're going to have to wear a business hat. We are promoting this digital first approach, to use the digital tools out there to help them. You know, it makes sense. You can operate anywhere in the world 24/7, 365, as long as you've got a computer and internet connection. So, you know, it's working smart, and landlords are going to have to professionalize post COVID-19. Otherwise, I don't think they're going to survive. Would you agree with that?
Yeah, Vanessa, I do. But I'm going to be a bit controversial here, because I'm going to say that any landlord who is not approaching their portfolio professionally before or after post-COVID was probably not in the right business. They should be doing something else. If you're going to be a residential investor or a commercial property investor, you've got to treat it like a business. It's not a hobby. Don't be an accidental landlord. Be a purposeful landlord. And yes, we have had a raft of legislation which we now have to accommodate. Obviously, the latest one is the EICRs, the Electrical Installation Condition Reports, which are all, you know, everybody's familiar with all those. But the critical thing is that you need to deal with your residential lettings portfolio as a business, and you need to have your business head on, which is what you're alluding to, Vanessa. Yes, it's become more relevant post-COVID, but you should have had it on pre-COVID, really. Just be on it, you know. And this is not a pitch for me or anything like that. If you're not sure how you should approach in a pragmatic and business-like way your residential portfolio, go to the local guys who you see are cutting it in terms of portfolio and stock, and speak to the principal, speak to the director, say, okay, this is what I do, this is how I do it, am I in the right vein? And if they can't give you some really good advice like Harvey and I might be able to, well, don't use them, you know, or knock on the guy next door and find out. So the other thing is, if you're looking to take a letting agent on or getting some advice from them, deal with somebody who's actually got property of their own. Harvey's got his own portfolio, I've got my own portfolio. You know, we learn lessons every day, and we learn hard lessons every day, and you need to share them with people who are on Property Drive, etc., which is one of the reasons why we're on today.
Well, I second that 100%, Lex. Certainly newcomer landlords, if they're just starting out, we always recommend that they start with, an ALA or Safe Agent or RICS accredited agent like yourselves. And certainly I would regard both yourself and Harvey and all the other, reputable agents across the UK as a real resource for landlords and property investors. And Harvey, you're always happy to talk through deals with people and guide them, and you know your patch like the back of your hand, don't you?
Yeah, absolutely. I mean, it was only yesterday that we let a warehouse to a tenant, and I went in to see them. I was just passing by, so I said, "How are you getting on, guys?" And he said, "Actually, we're trying to buy some warehouses ourselves." And I said, very happy to have a look at it for you, because what he said that the landlord wanted was a bit too much money, and I said, "I don't really want to pay that much." So yeah, the point is, he might spend X amount with us, but he might end up saving himself 40, 50 grand perhaps. So second what Lex says, take professional advice, and it's got to be professional, some people, and commercial property is specialist. You get maybe some estate agents that brand themselves as commercial property experts as well. Just got to be a little bit careful that you do get advice from a specialist.
Yeah, because it's all, at the end of the day, it's all risk mitigation to work with people such as yourselves with your local knowledge. And it's the same with using the digital tools. That's also a form of risk mitigation. Yeah. It's almost like, like an insurance in a way. And it can really, stop you making bad mistakes. And as John Howard said earlier in the week, some of the best deals you do are the ones that you never buy, because they would have financially crucified you. So it's really important to understand what's motivating you to buy, and making sure that the numbers stack up. And any closing remarks from you, Aviram, in Tel Aviv, listening to us talking about property in the West Midlands?
I think what I learned from this call is that our vision is basically to provide as much information as we can to the property investor, to the landlord, and using technologies like Landlord basically helps them to understand what they have and what they need and mitigate risks. And if we look at the deal analyzer, this is the place to put, and we spoke about today and many times about the worst case scenarios, and like put the pessimistic assumptions as well. See what will be like your worst case, and then make a decision. And during COVID-19, we also released the stress test of the rental cover ratio. Like take into account cases that you that you won't get the rent that you expect to get, and how it will impact your portfolio and your metrics. And I think that technology these days can help you do it from anywhere, from your mobile, from your iPad, like on the go, on your desktop. And I think, and this is like a baseline when you meet guys like the people that we met this week. This is like the baseline. Like if you have everything in place and you track it, then you can get the best advice from the professionals.
Yeah, indeed. We all agree that property is a people business. Yeah. We all agree that property is a people business, and it's all about nurturing relationships and maintaining relationships. So guys, thank you very much to both of you for joining us on the call.
Pleasure.
Harvey, you may recall, was in our Young Entrepreneurs Week a couple of years ago. And Harvey, it's great to see you advancing your career and working with Lex, and now director of your own kind of branch of Lex Allan, your own brand. So you're very
incredibly lucky. It's very important that you mentioned. Yeah, good point, Vanessa. Yeah, he's a very, very lucky young man. Yeah, definitely.
Well, it's just so lovely to see young people doing so well in property, and with such credibility and such obvious knowledge. So I'm going to tip my hat, if I was wearing it, to you, Harvey. And Lex, thank you to you as well for your insights. And you know, you've got so much knowledge to share. I would love to catch up with you again if you're up for it. And we can talk again on some other topics and get your thoughts on those. But for now, we're going to sign off from this episode of our Deal Analyzer Week. We do hope you've enjoyed listening to Lex and Harvey, and stay tuned, because we've got one more installment tomorrow. So I hope you'll join us there. But for now, we're saying bye-bye. Thank you, everyone. Bye. Thank you, guys.